Okay guys, I'm back. Here's part two, and we'll look at a longer term time frame for the S&P and a couple other markets that are correlated or generally trade inverse the general market. So this first chart is the S&P, and you can see here this green shadowy line. This represents the 50-day moving average, and you can see here that we are now below it. I would say, let's go ahead, check the NASDAQ. Yeah, we bounced, not bounced, we closed right on it. It would not surprise me in the least to see the markets get some sort of dead cat bounce from here. The RSI is right at 41 here. We've got 50-day moving average support. Let's go back to the S&P. I wanted to see, the RSI is at 36, 37. Generally, in a bull market, the RSI bounces between 40 and 80. Yeah, we've gone a little under there. Let's look at the Dow. Ooh, it's actually at 33. The Dow's looking pretty weak. We've really sliced through this. Yeah, it's pretty surprising, and here you can kind of see the volume. So I don't know, maybe we'll get a bounce on the Nasdaq and S&P, but the Dow may bounce and may find resistance at this 50-day. So that's something to look for. The dollar generally moves higher when the markets, well, as of late, when the markets are correcting. That wasn't the case. Well, this is a weekly chart. I'm actually not sure what the Dow or the dollar did today. It probably didn't move that much, but it is bullish. I mean, on a weekly basis, we're in an upward sloping channel. We've recently successfully tested it, and when you look at the euro, it's basically, it hit resistance here and it looks like it's turning lower. This is probably in some kind of a channel. I should have probably drew a line here. You can see here. So the euro looks like it wants to roll over. The dollar looks like it wants to climb higher. That could put pressure on the general markets as well. Maybe this sell-off turns into something a little more nastier than I think a lot were suspecting. Bonds popped up. I've been writing and talking about bonds for what seems like forever on Zen Trader, but I only do it every so often because it just seems like everyone's so ready to write off bonds, and they say they're in a bubble, but they're not really in a bubble. This is a very bullish chart. Throw out what you think should happen. It basically came down here, bounced off this support level, just like it did here back in looks like October of last year. It's consolidating here. Now, even though this is a bullish chart, the easy money, in my opinion, would have been buying sometime around here and trimming a good bit of that, probably 3/4, I would say, right around 121. Because even though this looks like it wants to go higher, I imagine it's going to run into some sellers, so I would be taking a lot off if I was in this trade. I'm not actually in this trade, and because if it finds resistance and you take 3/4 off, and then it rolls over and forms some kind of double, triple top here, however you want to look at it, well, you've got your profit. But if it breaks through, you still have say 25% or 1/3 of your shares, depending on how much you sell. So, and you've got this volume here. So yeah, this was a really strong move up, and this looked like a bubble. But when you look at the base that it was coming from, that's why it's important to always look at the weekly chart. So you've got this big breakout, and then this double top here, this rollover, and then this retest, and now it looks like it wants to move higher. So with bonds moving up, the dollar moving up, the euro moving down, gold's been getting crushed, although it could find some support sometime over the next couple weeks, but that move will likely accelerate to the downside. So be careful, and like I said, I'll be sending an update out to subscribers for when I enter my shorts.